I would say, Minister, the position that Ireland is in today regarding our corporation tax should never have materialised in the first place, because we're now in a situation where our European partners are trying to bully us into a situation where they want us to increase our corporate tax rate if we're to get the quid pro quo, so that they would reduce the amount that they're fleecing us as part of the EU portion of the bailout fund. And our EU partners know well that our position is weakened, and they know that for a number of reasons. They're well aware that the government could allow the issue of corporation tax to be set at an EU-wide level through a process called qualified majority voting, which was not possible prior to the passing of the Lisbon Treaty, as a move to qualified majority voting would prior to this required the consent of the Irish people through referendum. And people have claimed during the Lisbon Treaty that there was an attempt to muddle the issue. There was no attempt whatsoever to muddle the issue. We know on this side, who successfully campaigned against the Lisbon Treaty on the first instance, that Ireland still retains a veto. But that veto lies in the hands of the government. Ireland, before the Lisbon Treaty, held two vetoes. And that is that the veto that you hold at the minute allows you to move the issue of corporation tax to qualified majority voting. It allows you to give up the veto, whereas before the passing of the Lisbon Treaty, we had two vetoes. If you wanted to make that move, you would have to go to the Irish people and ask them in referendum to do that. Our partners also know that our state hovers on the brink of insolvency, and the refusal of this government to quite categorically state that they will put the interests of the Irish people first and foremost, which would include forced burden sharing on bondholders, has left our partners in Europe in no undoubtedly situation. They're very clear in this here that we're in a weakened position, and that they will try and force more concessions from us. And like any backstreet lender, where they're offering cash up front, they will make sure that the financial cost will be severe and will be significant in the long term. And that is what is happening at this point in time with the proposals around CCCTB and the corporation tax. And even we've already seen it with the interest rate. But last but not least, what they have is the mother of all Trojan horses. And that Trojan horse comes in the form of the common consolidated corporate tax base. And that is the Trojan horse. And while we talk here, and a lot of the debate has been about the corporate tax rate of 12.5%, and we will not give in that there, and rightly so, and Sinn Féin will support the government in their efforts to resist the attempts to pressurise us and to bully us into giving up our sovereignty on that issue. But while the government is battening down the hatches, and while we're securing the perimeter so that we don't allow them to come in and force us to increase our corporate rate tax, what we forget is the Trojan horse is sitting right in front of us, and that is the CCCTB. Because if the CCCTB becomes ineffective, it will lead to a number of things, and it will lead to one of the options that we will have will be voluntarily having to increase our corporate tax rate, because our corporate tax intake will have been significantly reduced. And I noted, Minister, in your comments that you talk about that the Minister or the Taoiseach would not allow in the Pact for the Euro to state anything in relation to the common consolidated tax base. But I've read the statement that came out, the conclusions that came out from the head of government, and it's clear that there are issues there in relation to the CCCTB that the Taoiseach has indeed signed up to. We know that the impact of the CCCTB will be severe on countries like Ireland. There will be winners and there will be losers, but undoubtedly Ireland is one of the countries that fall into the loser category, and probably one of the biggest losers in relation to that there. And they're not just my words, but we just have to look at previous studies that have been done, commissioned by the Department of Finance, done by Ernst & Young, which found that some member states will be faced with difficult political choices if they participate in the CCCTB, including. And the three choices that they said, if we participate in this year, is that we will have to reduce public spending. Well, we're already doing that, and God forbid that we'd have to do it more. The second choice we would have to increase corporate tax rates, and the third choice would be we'd increase tax on households. Again, something that we're already doing. So they're the three stark choices that the Minister or the Department of Finance report. No, I don't. No, I don't. I don't. I don't. I don't. No. No, we didn't. We didn't. And with a bit of manners, and if you listen to the debate, and as I said, you maybe check the dial record, see which way we voted in the radiation one, and it's not in the manifesto, and we can talk to you about that later on. And I don't know why the Minister is getting uptight about the fact that the Department of Finance report says that these are the options available to this state if the CCCTB is introduced, because the Minister is telling us that his government won't allow the CCC to be introduced anyway. So it shouldn't be something that you're getting uptight in relation to. But that report was commissioned long before Ireland entered into the austerity pact with the EU and IMF, long before the scorched earth policy of cuts that was enforced. In addition, because states like Ireland will lose corporate tax revenues, they must either decrease transfers to households. What does that mean? That's what the report says. It means social welfare transfers, it means payments that will be made to the sick, the vulnerable, the blind, the incapacitated, or increase corporate income tax, or balance their budgets. In order to balance their budgets. And we know that there's a negative impact on the economy. We've seen in the report that in terms of unemployment rate, and one thing I'm sure we're all agreed is that unemployment rate in this state is far too high. Our unemployment rate rests at this point in time at 14.7%. You know, the countryside is littered with people who are taking the choice to leave our state and give up because they can't find work. But what the Department of Finance report shows that the voluntary acceptance of the CCCTB would increase unemployment further. It would increase it by another 0.5%. So it is hypocritical that the government are signing up to a pact. And signing up to a statement that is supposed to increase employment, but which will in fact exacerbate the problem further in struggling economies such as Ireland. The Taoiseach Minister Enda Kenny stood before this House only a few hours ago, and he told us that he, on behalf of the state, would be supporting the pact for the euro, and that will be before the European Council this week. But the Taoiseach signed up to the statement, and the pact was dealt with at the statement of the head of states of government of the euro area on the 11th of March. And the Taoiseach signed up to that statement, to the conclusions of that meeting. And I'll read to you what part of that statement includes, Minister, for your own attention. It includes the statement saying, developing a common corporate tax base could be a revenue-neutral way forward to ensure consistency among national tax systems while respecting national tax strategies and to contribute to fiscal sustainability and the competitiveness of European business. Now, that is something that this Taoiseach, on behalf of this state, signed up to. That is the conclusions of that meeting. So, you know, I listened with much interest to your comments. We obviously don't know what happened. We weren't there at the meeting, but the public document that came from that meeting has the following statement, which was the conclusion of that meeting in which the Taoiseach was a party to. So the question has to be asked, how will the common consolidated corporate tax base be revenue neutral when it will drive down employment, as I have already mentioned, when it will put more people on the dole, when it will decrease our GDP further? And it is estimated again in other reports that the decrease in GDP to this date would be of the magnitude of 3%. The Minister may state, you yourself, Minister, may state that this government is opposed to the introduction of the CCCTB. But the motion before the House, from the Fianna Fáil party, clearly outlines, in a very brief motion, and it talks about that we are opposed to any Irish participation in proposals to introduce a consolidated corporate tax base within either the Eurozone or the European Union as a whole. And that doesn't stop you from involving yourself in discussions with European partners in relation to the matter, but it is a fixed position by the Dáil that we are opposed to such a move. But what has this government done? This government hasn't accepted this motion. This government doesn't want unanimity on this matter. This government has proposed an amendment, and it has deleted that section. It has deleted the fact that we're opposed to the CCCTB, and it has instead put in some wishy-washy words that we will deal with this with our European partners through negotiation. If we are opposed to such an issue, then with the government's overwhelming majority, let us vote on that matter. No, let us be very clear and categorical on this issue, as the same way that this government wants us to vote on the fact that we want to retain the 12.5%. The fact is that the message that has been sent by this government from this chamber tomorrow night, when this vote takes place, is that the issue of CCCTB is up for grabs. And that is clear not just in relation to the amendment of this motion, it is also clear in relation to the statement of the conclusion of the meeting that took place on the 11th of March, of which the Taoiseach was part of. And there is other reasons to be sceptical about all of this, but I'll come to them in due course. In relation to the issues of taxation and other aspects of domestic economic policy, my party doesn't accept being dictated to either from the IMF or the EU, and that includes being asked or being forced to increase our corporation tax. And we're consistent on these matters, unlike the proposers of the original motions and the two government parties, because we have stated that we will reject, and we're calling on the government to reject, the financial conditions that come with the IMF and EU deal in what is called their assistance package. As I've mentioned earlier, the Lisbon Treaty, which of course surrendered further control of this state to Brussels, has a part in all of this to play, because it has moved us from a position where we had a veto in relation to corporation tax. We had a second veto in relation to corporation tax, and our European partners know all too well about this. But although maybe that conceding of sovereignty is very small and maybe appears irrelevant in the context of the abject surrender to the EU and the IMF, and I must say that there is an element of a bit of hypocrisy in all this wrap the green flag around me stuff about corporation tax. Of course, it is a very serious issue, and it is one that should not be dictated to by Brussels or by anybody else. But as we said when Fine Gael tabled this motion during the last term, there are many other evils also that has been visited on us by or planned to be visited upon us as a consequences of the bank bailout. And as I said in my earlier statements, we've now going to have 6 hours of debate in relation to this issue, a hugely important issue for the Irish economy. But we rushed through a social welfare bill which crippled people, which crippled ordinary people who are dependent on support from the state. We rushed through a finance bill. We've introduced a universal social charge with very little debate in this House, and yet this is the priorities of the parties to continue to raise these issues, and that is their right to do it in their own time. But the question has to be asked when we look at the assistance package and the conditions that are attached to the assistance package. Is it now the position of Fianna Fáil, of Fine Gael and of Labour that it's okay for the IMF and for the EU to dictate economic policies on everything else? It's okay for them to insist that we sack thousands of public sector workers, that we sell off state assets, but they're not allowed to ask us to raise corporation tax? Clearly, from our point of view in Sinn Féin, none of these issues are acceptable. They should not be allowed to dictate in any way, shape or form our economic policy in this country. And I particularly pose the question to the Labour Party: do you now agree with Fianna Fáil and Fine Gael that the state's economic policy should be dictated in all respects apart from corporation tax, or will you continue to use the excuse that you've been placed in a straitjacket and you have no choice but to do the horrible things that you so much objected to when you were on this side of the House only a few short weeks ago? What we're doing here tonight, or what we should be doing here tonight, is expressing with the same vigour our opposition to destroying our public services, to selling off Culture, Bord na Móna and ESB, as we're doing in relation to the bullying of other member states in relation to trying for us to increase our corporation tax. In that, at least, Sinn Féin is consistent. At the present time, being forced to raise our corporation tax would only constitute another turning of the screw by our friends in Europe. The same friends who, Fianna Fáil, Fine Gael and Labour, assured us during the Lisbon referendums that they had their best interests at heart. We now know from the interest rate that was being applied that that isn't quite the case. And it is apparent now, both in relation to the terms of the bank bailout and the strong arming in relation to the corporation tax, that depending on our friends in Europe is a little like befriending Tony Soprano. They may have interest in cuisine and wear sharp suits, but when it comes to the bottom line, when it comes to their interests, then their only interest is their own selfish strategic interest. The fact that we're discussing here, discussing this issue twice in the last couple of months, emphasises the importance that this state has in attracting overseas investment. It emphasises the fact that we do not have a properly resourced, a properly developed indigenous sector, and it is because of this that we over-rely on foreign direct investment. And foreign direct investment in any place is always welcome. I would love to see some of it in my own constituency in Donegal, but we might have to wait a while before that happens. But when you look back at why, at the time of Lemass, why did we actually pursue this policy? It was because at a time when at a time when those with wealth in Ireland refused to invest in our own structural development, and he looked at foreign and looked to secure overseas investment. I will be brief in some of my other remarks, but I do want to just emphasise the point that the common consolidated corporate tax base is the Trojan horse, and it is one that this government should not give up on. It is one that this government should not concede on, because it will severely damage our economic fortunes. I said earlier on that I was sceptical of this government's intentions in relation to the CCCTB, and I said that for a number of reasons. I've said it because of what the Taoiseach has signed up to in the statement from the heads of state on the 11th of March. I've said it because you have put an amendment down saying that we're opposed to the CCCTB. But I also say it, Minister, because members of your party, your MEPs, and indeed the Labour Party in Europe voted for a report which was called the Bersani Report. And that report dealt with the issue of CCCTB. This issue has been going around Europe since the early 90s. There's been a number of reports, but the Bersani report dealt with it. And I want to actually read out what members of Fine Gael at that time and members of Labour voted for. And I'll conclude in this here. And this is a part of the motion that they voted for. It says, regrets that some member states still reject the need for greater cooperation on tax matters, in particular with regard to the tax base applicable to companies, bearing in mind the fact that coordination between member states with regard to company taxation is one of the instruments laid down in the integrated guidelines. It goes on to state, stresses the importance of adopting a common consolidated tax base which will fulfil the requirement of greater integration in the internal market. And it goes on. And that is what Fine Gael MEPs voted for. That is what Princess Drossa and others within the Labour Party voted for at European level. And it's for that reason that I believe that this government is going to allow the Trojan horse of the CCTB to enter into here, which is going to cause serious financial pressures on this state, which will result in one of the three options that I have outlined earlier on, options that were outlined to me by the Department of Finance.